So, what does this crazy economy have in store for us this week when it comes to mortgage interest rates? I don't know, but stay tuned. We're going to try to figure this out together. My name is Aaron Gallagher, and I'd like to become your number one mortgage guy. I am a mortgage broker with Edge Home Finance, so let's dive right in. All right, this morning, the Fannie Mae 30-year 5% coupon is only down about 6 basis points, which is nothing to really worry about right now, and the 10-year treasury is below 380, and as long as we keep that thing below 380 and going down, that's going to be good news for mortgage interest rates. However, there are a lot of different factors that drive mortgage interest rates, a lot of economic news, and this week is chock full of economic data. Every day this week, we've got an economic report coming out. Each and any one of them could have a positive or negative impact on bond prices, and we just don't know what the week is going to bring. Normally, I would try to make some sort of a prediction of where I thought things were going to go, but with the world basically being on fire, with a hurricane tearing up the Florida and the southeast part of the United States, we've got all kinds of disasters happening all over the place. Too much unpredictability, so I'm not going to try to make any sort of a prediction about mortgage interest rates this week, but I'm going to give you a brief explanation about how one of these reports could impact the mortgage interest rates for us. Okay, so let's look at Friday, the unemployment rate. That's one of the biggest reports you hear on the news when the data comes out, and if we see unemployment continuing to go up, that would indicate that we are heading into a recession. I think we're already in one, but that would indicate we're heading into a recession because employers are laying people off. There's no new jobs out there. And typically a recession would be a good thing as it pertains to mortgage interest rates, because that means that we're slowing the economy down, or the economy is slowing down due to the recession. And that means inflation would be going down as well because there's less dollars chasing the goods. And when we take inflation and shrink it down, make it where it's not as bad as it's been, that's going to be great for mortgage interest rates, because inflation is what drove those interest rates up so fast in that 18 to 24 month period. They just shot off like a rocket, which didn't help anything in the housing market at all. So if we get higher unemployment numbers on Friday, and if it's, like I said, an indication of a recession, that could be good news for us when it comes to mortgage interest rates. Now, that would be great for rates to come down a little bit more. Still doesn't solve the housing inventory problem, but at least we might be able to get some of your buyers off the fence, and I can do some more mortgage loans. Right here is the Japanese candlestick chart, and the roller coaster that you're seeing here are bond prices as they trade on any given day. And when bond prices are low, meaning investors are saying, we don't want bonds, we sell them off and the price drops, that makes the interest rate go up, okay? When bond prices are in demand and investors buy them, it drives up the price and it makes interest rates go back down. So let's go back and look again. I know we looked at a trend, but let's go back 2 years again. We can see that the downward trend worked against us, but we are now in a trend. Even though it's a roller coaster ride, the trend is going up. So the trend is our friend. So as long as we can continue to close above this 20-day moving average and we don't get too far below it, if we break through it, we can see that this trend is going up, even though it's up and down on a daily basis. So if we can continue that ride, that's going to be good news for rates and hopefully for the housing market and for those of us in the mortgage business as well. Now, if you have any questions or would like to talk at length about any of the things I've discussed here quickly, let me know, 217-618-6811, or you can email me at aaron.gallagher@numberonemortgageguy.com. Happy to help anytime at all. And if you have a deal in progress and you think that the lender is dropping the ball with your clients, reach out to me. I'm happy to help give some advice. And if I can help save a deal, I am here to do that. So any questions at all, let me know. 217-618-6811. Make it a great day. Sell some houses. Talk to you soon. Bye-bye.